that is the most important thing.
Amy Grimble wants to buy a house in her neighborhood. After years of renting, she thinks she might finally be able to afford it.
Through COVID, with inflation and grocery prices and everything, there was just no opportunity for us to really save. But, you know, obviously with the recent interest rate changes, there's been a little bit more hope.
That hope, as the Bank of Canada cut its key interest rate by 25 basis points to 4.5%, its second consecutive cut, this one coming after June inflation dipped to 2.7%.
Broad-based price pressures are easing, and we are increasingly confident that the ingredients are now in place to bring inflation back to the 2% target.
The bank is confident it can now lower interest rates without driving inflation back up, potentially bringing some relief for Canadians.
They'll have more money in their pocket because the bank, again, reducing rates reduces your interest on your credit cards and it reduces interest on variable mortgages.
Still, with this latest rate cut, a new question emerges.
Okay, so you want to know where interest rates are going.
The bank says it still has to keep an eye on inflation, including the impact of housing costs, both rent and mortgages. But if all goes according to plan,
it is reasonable to expect further cuts in our policy rate.
That decision set to come in just over 1 month. As for Grimble, she's starting to look at listings, though she worries she may not be the only one.
Once the rates do go down, sellers will kind of raise their prices just a little bit more.
A common concern in the midst of a housing affordability crisis, but still too soon to tell. Paula Duhacek, CBC News, Toronto.